Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing JD.com stock. We'll be using TIKR terminal to go through the financials, and then I'll put the numbers into my DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are JD.com? So JD.com, also known as Jingdong, formerly 360 Buy, is a Chinese e-commerce company headquartered in Beijing, and it's one of the two massive business-to-consumer online retailers in China, and the other one is Alibaba. Tmall, which is run by Alibaba. So JD.com and Alibaba are the two big players in e-commerce in China. Yeah, the company was formed in 1998, so it's quite a young company still, just over 20 years old now. The company itself is listed on the Nasdaq. It's a component of the Nasdaq 100 index. Now let's have a look at the sales per business for JD.com. And JD Retail makes up 91%, JD Logistics makes up 11%, New Businesses makes up 3%, whatever that is, all in US dollars. Sales per region, all in China. Simple, not much to say apart from that. Now let's take a look at the financials for JD.com using TIKR terminal. We'll start with the income statement, 5 years worth of data, keep it simple. So all of this is in Chinese renminbi or yuan. Use them interchangeably. I'll probably say yuan, easy for me to say. Revenues over the past 5 years have nearly tripled. Awesome stuff. Let's have a look at the profit though. So they started to become profitable in 2019. 2021 they made a loss, ever so slightly, but yeah, interesting anyway. Obviously want them to keep making a profit, but we'll see if they are free cash flow positive. Shares outstanding have increased a little bit. Growing business, that is to be expected, but not too much really in the grand scheme of things. Balance sheet, let's see what it's looking like. So lots of cash on hand, increasing in the past 5 years. Long-term debt, let's have a look. Actually decreased over the past 5 years, so that's epic stuff really. Actually no, last 12 months has increased a bit. I'll take that back, it's increased by a little bit, so it's not the end of the world. Return earnings have gone up, so we've finally got positive retained earnings. Lovely stuff. Cash flow statement, let's have a look at the cash flow from operations and capex. Both of these figures combined are free cash flow. And yes, it's been free cash flow positive all the way through. So them losses before don't really concern me. If you're producing free cash flow, that's what matters. And yeah, it's looking decent. I mean, it looks like 2021 is lower than 2020, but there could be a good reason for that. But yeah, free cash flow positive, so there's definitely a value to that. Do they pay dividends? Doesn't show us dividends. I know they've recently paid a special dividend, but it's not shown here yet. We'll go to the ratios. So return on capital, pretty low. If it's loss making, this will mean why it's low. Something to bear in mind. Gross profit margin quite low as well, and net income margin quite low. Luckily we've got some free cash flow, which is good. CCC is negative, which is a good thing. Current ratio is above 1, love to see that. Debt to capital, not much debt in the business, to be honest. Really good stuff that, not much leverage, what we like to see. It's a bit all over the place really, and we'll come to see my analysis checklist will show this, but we'll see if there is a good value to the company with the DCF. If you'd like to use TIKR, my affiliate link is in the description below. Use that, sign up, have fun analysing some companies, and let me know how you think it is. For a £10 a month, I think it's a very decent product. So yeah, enjoy analysing some companies. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's take a look at the genuine impact stats for JD.com. And we'll start with the quality metrics, so it's looking very high, it's got the shield around it, so that is really good stuff. It's looking like it's a very high quality business. So profitability medium, financial strength very strong, capital allocation sound, love it. Value wise, mixed bag, medium, so income statement cheap and the rest of it's looking medium. Historical growth, shown very high, but the rest of it's not pulling through for some reason, maybe because we've made losses before, no dividends, so, but yeah, high growth, high quality, it's looking decent, isn't it? But yeah, some interesting insights there from Genuine Impact. Now let's take a look at my analysis checklist for JD.com. We'll start with some basic metrics, so 100 billion. That's got to be US dollars, surely. Yeah, it's got to be US dollars. Current share price is $64 a share. And these guys aren't pulling through, so we've clearly made a loss in the recent quarter. Right, first pill, it's not looking good, is it? So return on capital is 1, 5-year average, not great. The margins aren't quite there for what I'd like to see. Free cash flow isn't either. Luckily there's not much debt in the business here, you can see current ratio is above 1. Total debt to capital is 12%, and we've got good CCC as well. So it's not all bad, I guess, but yeah, you want things, some of these metrics to improve, really. Proven ability to grow, it's all good apart from net income. 2021 was down on 2020, so that's probably why. Great capital allocation, so repaid a lot of long-term debt, issued a few shares, no dividend. That might be wrong though, because we have recently paid a dividend. Good acquisitions, that is a big gain on asset sales. I must have sold some sort of asset somewhere down the line. Buy at a fair price, there's no PE ratio, but price free cash flows at 16, so it looks pretty cheap. And DCF for 10% return, it's literally there, so 0%. Current share price is $64 USD, so this is my DCF, so free cash flow into the future. Quite conservative actually, I've taken analyst estimates and I've just bonked a big 40 yuan on there. Very conservative, I think. $64 per share for JD.com. Yeah, I know a lot of people who value this company a lot higher. I mean, I'm very conservative with these numbers, I must say. And I don't believe it's probably fair, but is it? If you can get a 10% return for extremely conservative numbers at $64, it's looking really, really good. What can I say? These metrics here don't look great. It is a new business, I guess. They're reinvesting in themselves, so the return on capital isn't there yet, but eventually you'd expect this figure to go up a lot. Maybe the margins will stay in the single digits, but it doesn't matter if you've got high return on capital, so current levels, it's looking very interesting. So there we have it, that was my full stock analysis for JD.com. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching, I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one, however you can check out some of these videos.